Welcome to Mad Money. Welcome to Cramer. I do make friends. I'm just trying to make you a little extra money. My job is not just to entertain, but to educate, to teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. You always wish you had a stock that went up $10 in a day. And today we had a bunch of them. It's a sign that there is a gigantic change afoot, possibly the beginning of something that can make you a lot of money. In a buoyant market where we get strong retail sales numbers, allowing the Dow to gain 230 points, S&P advanced 0.54%, NASDAQ climbed 0.74%. It might be worth going over the anatomy of a 10-point gain in a large-cap stock, because I now think that there are many of these to be had, and I want you to have one. We just need to figure out what we're looking for. First, the good news. These gains are anything but isolated. We're getting a bunch of them each day. Today, we saw PepsiCo soar about $10. PepsiCo? Why? Better than expected numbers, of course. A turn in the fortunes of unhealthy foods. Better executions. And a variety of different products. PepsiCo isn't some tiny micro-cap stock. It's not like some meme cyber player or uranium bottle rocket, and it is not part of the Palantir empire. They probably have something in your fridge or your pantry. Take that, Palantir. We saw Eaton and Parker Hannifin. If you're from the Midwest, these are destination places. Soar. But those are a function of strong data center orders that came from lead contractors ABB and Legrand, two European construction companies that just reported that are huge builders of these warehouses full of servers. There's no doubt that the data center build-out is the single biggest construction boom perhaps since World War II. You can see it if you look at Oracle every day, by the way. I like the build-out. There are many, many orders coming to them. I keep telling you these stocks are good. Parker Hannifin rose $13. Eaton jumped more than $17, or nearly 5%, as investing club holders know. That Eaton move turned my earnings season around, because it's a core position in my Travel Trust. Although a few minutes after I learned about the ecstasy of Eaton's victory, I had the agony of Abbott's defeat. So that's something we'll discuss momentarily, because I'm a masochist and I don't want to pretend that everything I do is right, because it isn't. Now, sometimes in this game, you do just get lucky. You'll come across a surprise quarter that tells you everything you need to know about what can cause a big cap stock to rally 10 points in a session. You'll see how a star is born, and even get a blueprint for what you need, what you should be looking for. Yesterday, we got a beautiful schematic from none other than Johnson & Johnson. Boy, talk about something that's name brand in your house, which handed you a 10-point victory for the ages. Here's the stock of a storied company, one of just two AAA balance sheet companies with a solid dividend yield and great prospects. Everyone knows this company, everyone. I mean, lately its stock has languished, though, because of litigation. The lawsuits alleging that their talc-based products contained asbestos. J&J baby powder used to use talc, though it's been phased out. The plaintiffs bar, using what J&J calls junk science, I like that in the conference call, has recruited more than 80,000 people who claim that talc contained asbestos and gave them cancer. It's kept the lid on the stock. I think that lid is I think that J&J is going to win this, but it's going to take a little while. In the meantime, the lid just blew off the stock yesterday, and it rallied more than 10 points. Least expected rally that I've seen in ages. But you know what? This company put on a clinic that showed you exactly how you can orchestrate such a big gain. So why don't we just take part in the clinic? Well, we'll attend it remotely. What does it take? Surprises. Many surprises. That's what. And I'm going to go over them because it's terrific to have an earnings scorecard / schematic of what a winner looks like. If another company can do something similar, then I think 10 points of upside are just the beginning, including what's going to happen for J&J. Yes, I think that J&J's big move is just starting. So what did J&J have going for it? First, point blank, you got the holy quadruple. That's J&J beating sales and earnings estimates for the quarter and then raising their sales and earnings guidance for the future. You gotta have all four for a stock to go up. And they have to be dramatic. J&J raises full-year reported sales guidance by $2 billion, the midpoint, and its earnings per share guidance by 25 cents. That's just a monster set of numbers for a company whose stock has been languishing. Second, in the case of the pharmaceutical industry, you need to show some breakthroughs. J&J revealed some results of a 5-year trial that showed how their multiple myeloma immunotherapy is bringing a real life-saving hope to patients suffering from this horrendous form of cancer. Third, the company has to have good news on the tariff front. In this case, J&J had previously put out some very high estimates for the cost of tariffs, and they took them down dramatically. You know what? That made me feel terrific, because there are too many companies that are going to have to raise their tariff estimates, which will crush their stocks. For J&J, they cut their tariff forecast from $400 million down to $200 million. I'm calling that better than a sharp stick in the eye. Fourth, We know that there's some sense in the White House that other countries have been abusing us by manipulating their currencies lower, making their exports artificially cheaper versus stuff that we make. Now the shoe's on the other foot with the dollar coming down. The company estimates that it will have an incremental positive FX impact, positive, of $1.1 billion versus its previous guidance. That's outstanding. If you own multinational stocks, you may be in for a huge positive surprise. It's like, if it's like one of those things where, like, if you collect found money that's been missing, that's what this is, collecting found money that's been missing. Certainly worth looking for. Fifth, you have to be able to offset what's going away. In every business, there are products that become less important or are copycatted or leapfrogged. They become obsolete. The drug business is a formal exclusivity process governed by the Patent Office. When there's a loss of exclusivity, LOE, it creates a big hole. JNJ Stelara, a big-time autoimmune drug, just lost exclusivity. At one point, it generated more than $10 billion a year for this company. Yeah, and now it's just going, no patent protection, eviscerated, blowing a huge hole in earnings. But you know what? J&J is such an outstanding company. It gave you 15.5% operational growth for its pharma business, including 13 brands with double-digit growth. In other words, amazingly, Stelara won't be missed. I never thought that could happen. I thought that this would be the stench of Stelara. 6, if there was something wrong last quarter, it better be fixed. Well, J&J's MedTech division was truly disappointed last quarter. It was a major reason why the stock's doing poorly. Voila! MedTech was a bona fide all-star, something that very few thought possible. 7th, you need big margin expansion, always. This quarter didn't have good gross margins, something that was expected. But J&J did say it expects to see 300 basis points of operating margin expansion. Future margin improvement, oh, we love that. 8th, I love jaw-dropping projections. There were an incredible number of these in the conference call, including the stunning claim that by 2030, J&J will be the #1 in oncology with sales of more than $50 billion. Talk about something that makes you want to take a long-term position. They also announced a bladder cancer breakthrough, which could be worth $5 billion in peak sales and would mean so much for the patients. Holy cow. Very tough cancer. J&J has something for it. 9th, major healthcare companies buy other companies for growth. That's just what they do. I'd been concerned that the companies J&J bought for its cardio franchise were overpayments, indicating that management doesn't know how to make acquisitions. This is something I'm very concerned about Bristol Myers, by the way, just so you know. It turned out I was wrong in my judgment about J&J. The heart products we saw were remarkable. Let's hope that's the same for Bristol Myers and their neuro business. Finally, we want to know that the company has figured out that we want growth, high growth, and then more growth. And we don't want so-called safety. Safety is like Listerine, Neutrogena, Band-Aids, and Tylenol. Products that can be knocked off by anyone, with Amazon just eviscerating them on price. J&J had the foresight to spin off the underperforming Kenvue mixed consumer products, that including those, before they imploded, which we saw earlier this week. Some people second-guess J&J, not after this week. You do these 10 things right, or even just half of them, and I'm telling you, your stock's going to explode higher. If you didn't do it, if you failed to beat and raise, or if you cut, for heaven's sake, like Abbott Labs did, a company we're going to have on tonight, well, I say, look out below. The bottom line, check your stocks. Do they have a chance to change their stripes like JNJ? Do they fit the formula? Remember, JNJ's just beginning its move. Then you know what? You may be just sitting on, say it with me, a gold mine. Joe in Massachusetts. Joe.
Hi, Jim. My 3-year-old son and I watch the show every night. He loves the buttons.
I think the kid's got horse sense.
Yeah.
So what's happening?
My stock is down 11% from the all-time highs. Do I buy more now or wait for the tariff updates? My stock is Costco.
No, look, here's the problem with Costco. It is a victim of its own success. All it really does is ever go up, and then has these periods where it languishes. We're in the languish period. That's when you buy Costco. Do I think Costco's in trouble at 50 times earnings? Are you kidding me? I still think Costco may be one of the top 5 companies of all time. That is no slight to Jensen Huang, because he's #1. Never do that. All right, with earnings season in full swing, it's time to check your stocks to see if they can fit the formula I just gave you. Right, that checklist is actually pretty good. It took me all day. Now, on Mad Money tonight, Abbott Labs just got slammed today after reporting earnings. Buying opportunity, cause for concern, heartache, cheap scotch, linoleum floor? I'll find out. Then the callers of Cramerica stumped me on a little thing called Nutex Health, and then a bigger thing called Flex LNG. So tonight I'm digging into both names to tell you where I come down. And the price of gold and copper have soared so far in 2025. But are the miners cashing in on the rally? I've got the CEO of Barrick Mining here to read on the state of the commodity space, and he'll tell us whether we can make up the copper that everyone thinks we don't have in this country. So may I suggest that you stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.